Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, October 25th, 2023. It is 3:09 p.m. Eastern Time as I'm starting the video. Definitely wanted to get one out to you, and unless I do a post-market wrap or post any more charts, this might be it. I've got something that's going to take up just about all morning tomorrow, definitely all morning. I hope I'll be back by lunchtime. Just want to let you know I won't be able to post any updates tomorrow, anything after today, till I get back in. So hopefully, again, I'll be in around lunchtime, hopefully, not much later, and we'll pick it up then. Hate to be away from my desk on a week like this, but it's something I already had on the calendar. Okay. Let me get this out there so I can get out by the close. So if I've got some of you confused, I'm sure I do. Talking for the last week or so about suspecting the hammer is about to drop on the market this week, and this is actually that was 2 weeks ago. I said then we've seen this is early makings of a hammer drop. I mean, I wouldn't call it a complete hammer drop yet. It's another wave down, but that was Friday before last. So there's Friday, this previous Friday right there, and so, yeah, it's been a pretty good move down. Okay, let me just get into the charts and say this too. This is more timely because by the time I get this video out before the close today, hopefully you might want to act on this. This is the post I just got out to you right before I did the video that I'm recording now, and I did follow up with a QQQ chart. I am aware that the majority of traders listen to my voice most likely do not trade futures, so as I said in there, and I just wanted to get the post out quick enough in case it broke out. It still hasn't, but so when I say you can replicate the levels, that's it. You look at the downtrend line, then you look at these previous reactions, and that's where on NQ you can see where my line. So this is that same bounce trading range, and I think it has a good shot of happening. I'm still sticking with and added to, as I said, and we'll add a little bit more. But ideally, it needs to break out soon. I said in this follow-up here that if it doesn't, again, this is just, there are no guarantees with this stuff. But from my experience, if we can't break out and start to rally soon, by 3:30 latest, then usually you're going to be looking at a trend day where you're going to see these little blips where it starts to go, but they sell into it. And a trend day, by the way, I kind of describe it here. That's when the market opens. Here's your opening, open and close right here at 4 p.m. This is a trend day to the downside. Pretty much you go and move lower all day. It's not a straight ride down, but it's not one of those back forth closes like that. And a bullish trend day is opposite. We open in the stock or the market, whatever you're trading, steadily drifts higher throughout the day from the open into the close. So that's why. So I'm trying to convey that you might not want to take a breakout at 3:50 or 3:45 p.m. It could rip into the close, but a lot of times I see those get sold into, and then you close out or not far off the lows. Okay, let me get to the charts real quick. I already did a pretty extensive video earlier, so I'm just going to do an update here. Yeah, we're below that 370, 54.70, and right now, unless we pop and get that rally into the close that I just laid out, we're going to close below. But as I've often said many, many times, when trading the daily chart, all that matters is the daily closing candle. So if, and again, it's a big if, but if QQQ pops here, rallies up, hits my target zone, that puts us right back. That's that level right there. Remember, we had one little intraday break below, only to close back above it. And so this would just park us back right on support and keep the market, keep everybody guessing. But more importantly, it would do a couple things as well. It will keep this positive, aka bullish divergence in place because we just put a marginal new low in the indexes with the indicators still making higher lows. And then it will also park us back on support. So any and I'm sure they're out there, those that shorted the breakdown today, will say rut row, it's kind of that rut row Scooby-Doo moment where the breakdown is no longer in effect. Again, if we close on or around close enough proximity to 354.70. However, it goes the other way. Look, guys, we're not far. And I can't rule that hammer thing out, hammer down scenario. As I said earlier, we do have a lot of support. We have my next target not too far below at 347. So if we dump into the close today instead of rallying, that's going to be a likely target that might park us right on there or hit that in the after hours session and then the 200 days. So the key is, stay flexible, but also I try to convey my messages and speak to both the less active trader, those that don't day trade, that don't have the time, the inclination, the skill sets, and nothing's changed on my longer term outlook. But I would be cautious here. Like I said, I'm seeing a lot of divergences, a lot of things fall into support, including the semis today, which are also now just below that target that I gave you earlier. But so that's that. And remember, it has the potential to be bullish because if you get back up there again, potential bear trap. Anytime you take out a previous low, it tends to suck in short sellers, also blow out stops on longs that are running pretty tight stops above the previous lows. And so just be aware and adjust. But bigger picture is the bearish case continues to firm up. I'm just talking about what might happen, I suspect, today. But we have had nothing but check marks across the board. As I mentioned earlier, ADP now down over 9% following earnings. And just one after another check marks I've had. The banks failing breakouts lately. Remember, the banks had very textbook bullish setups. JP Morgan, Citibank, Bank of America, and they broke out, and then they got those breakouts got sold into. And again, that's more indicative of bear market action. So yeah, I'm obviously feeling a little less confident about this bounce trade today than I was earlier. But there's still the potential, but it needs to giddy up soon. I'm just watching the tape. I'm watching the 1 minute, and this market cannot catch a bid. It's coming under some pretty intense selling pressure. All right, let me show you a few more things, and we will wrap it up and try to get it out to you before the close. So, as I said earlier, a lot of things still are on support. Apple is on that key 170.37 purple level plus the 200-day simple moving average. Microsoft, although they faded a good part of the pop, it's still well above its breakout, above the downtrend line and right on that resistance level there, about 340. So you can't call that bearish. Alphabet, obviously not looking good, and below the 127.15. But if we get a late session rally, we're going to park it right there. And again, that's what I'm putting good odds on. Just figuring that's what I've seen this before. Kind of run out, pull out, shake out some weak-handed longs, suck in some short sellers, and then park it there. And if they do, like I like to say, support is support until unless broken, and that means we will have not broken it on a daily closing basis. This is only an intraday break now. Given it's 3:16 as I speak, so less than 45 minutes to go. So if this market's going to do it, it needs to giddy up and go right now. And if it can, you still have potential. Almost pretty much taken out the divergence there on the RSI with a lower low. But we'll see how this closes on the daily. Amazon, remember they report tomorrow. It's Meta tonight, I believe, and Amazon tomorrow. Amazon took out the 200-day moving average right now on an intraday basis, but has the potential to close back on it. Remember, you're going to have, if that happens, what that'll look like. This fat part is called the body of the candle, and the skinny part down below is the tail. So at the end of the day, you just have the tail running here. So if it can park on or around 123, then it's back on support. And that's that. And also Amazon also has potential, I call it potential, but not confirmed positive divergence as I'm drawing out there. Prices today made a lower low, and you still have higher lows on the indicators down below. So, it's a lot setting up there if the market can reverse now. So, me, guys, I stay flexible. I don't get married to any one view. I'm, like I said, I'm leaning towards, like yesterday, I'd rather be short going into Meta earnings because the chart's pretty bearish. However, it's just a gamble. It's just a crapshoot to be heavy long or short now. The way I look at it, if these purple levels break and we're going a lot lower and the divergences get taken out, my downside targets, ultimately I think we're going a lot lower. So it's okay for me not to be pushing them hard right now. I think there's just too many when I can sit here and make a pretty darn good bullish case as well as a pretty darn good bearish case, that tells me to take a step back. You know, the best trades are when the charts are clearly bullish or clearly bearish. And price action lately has been bearish. Today, nothing but bearish. At this very moment, this very second I'm talking, quite bearish below the 200-day there in 123. And so, all right, I think you can kind of follow what I'm saying here. There's Meta. As I said, if it pops up, you know, just like the market, a lot of things that can put in a new high, but it's still going to be a divergent high. So it will not change my intermediate to longer term outlook. And if it, you know, if it drops here, that is going to it's going to have an impact on the market. Meta is not the company it used to be market cap wise. It's only, when I say only, quote unquote, $804 billion company. But, you know, that dwarfs Apple's 2.7 trillion market cap, Microsoft's 2.4. However, it is one of the one of the Magnificent Seven, they call it. So these are the targets. I've been, you know, laid these out a long time ago, and I still have a high degree of confidence it's going to get there. It's just a matter, is it going to do this, or is it going to do this and then that? So coin toss, guys, right now for me. And I don't bet coin toss odds heavy. I like betting when the odds are in my favor. Alrighty, what else? Tesla doesn't matter. It's holding support. A lot of things holding support. Semis pierced that level. I told you that was T2 from a long time ago. I've had these lines drawn out. First sell signals came back here. Actually, we had one there. Right here. Made a marginal new high. Still divergent high, back test of the that was our original short entry. Then we back tested, had another short entry there, went and broke that trend line, hit this one, then broke that. But here we are again, decent support, not super great, but decent, I would say, and positive divergence. So this today has the potential to be a big shakeout move. Even look, guys, even if we don't rally to the close today, but then Meta and or Amazon tomorrow lifts the Qs higher, because either of those two companies have the potential to bring the Nasdaq 100 up, then what you're going to have again are a lot of false breakdowns, aka bear traps, and those are going to be bullish and could send the market higher. So, like I said, it's been a very profitable trade. We had one bad trade earlier in the year on the semis, got in early, got stopped out. But other than that, they've been, caught a lot of that short on the way down, even some of these counter trend bounces. And so I'm okay. I told you, covered the short, reversed it to long. If it goes down here, I have the next support there. Unless the market just crashes, and if it does, I'll adjust accordingly. I think the RR right now favors being long. If I didn't think it favored being long, it wouldn't be long. It makes no sense. So that's where I'm at. So. Wow, I just wish we didn't have Meta tonight and Amazon tomorrow. Would make things a lot easier. But again, when I have to think like that, I just take a step back and look, you don't always have to be full in long or full in short. You can be in cash, you can be mildly short, mildly long, and you can always add to or subtract from those positions. What else did I want to show you? I think that's it. So you got the gist of it. And again, this is just short-term stuff. So if that pops, you see where I think it can go. I could probably give you one other. I will if you want to, because if we're heading into the close and we're not there yet, there's another potential target. We'll do it right there. That catches around 350. 350, 320-ish. You got a couple reaction highs here and one reaction low right there, but that's still the target zone. And like I said, I don't post many day trading ops, but if it happens, you're talking anywhere from a 1.3 to a 1.6% rally in a matter of minutes. We're talking, it's already 323 now, so if it's going to happen, it should happen soon. Here you go, starting to push it along that level, and then. All right, I'm going to stop the video here, and hopefully we'll see by the time I get out to you a big green candle there, and then just a lot of swift move up into the close. And if we don't, hey, well, close out my position by the end of the day or before Meta reports tonight. All right, I'm going to get the video out to you. Wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.